looking at the US dollar Japanese yen forex currency pair. The symbol is USDJPY. Okay. Take a look at this. Market's obviously really strong. We all know that. The market's been running multiple nice entries to the upside here, down in this area, down in this area. As you can see, the trend officially changed from down right down in here, right? Blue bars to green bars, change green bars right in here. That was telling you that the market should continue moving higher. Market turned green, came down, created my pattern. Just beautiful trade setups in here, okay? But look at where we're at right now. Now, as you can see, the market has taken out the 50 exponential moving average, right? It's taken it out. In fact, the mid-band is crossed down through the 50, which isn't great, but if you take a look at this longer term, the trend is certainly up. And what I've done is I've measured the Fibonacci retracements, right, from this low, from the low of the green bars right down in here, right down in here, measured from this low up to this high. Look at the 38.2% Fibonacci retracement right here. Okay, so in the midst of this big long uptrend, the market has finally pulled back to the first fib number of the bigger swing. Okay, not only that, but the market has created two consecutive inside patterns. You see that? Friday's high was lower than Thursday's high, right? Friday's high was lower than Thursday's high, and Friday's low was higher than Thursday's low, and then yesterday had a higher low and a lower high again. So again, you had two consecutive right here. See, that's an inside pattern. It's inside the prior bar, and then yesterday was an inside pattern. So we got two in a row, which means the market is contracting, right? The volatility is decreasing, so we want to take a breakout in the direction of the trend. So what I did was I had a resting buy stop order above yesterday's high of 95.20. We'll round it to 95.21. Went long at 95.24. So far the market's run up to 95.75. It's given us 51 pips. The initial catastrophe stop loss is below yesterday's low. Yesterday's low is 94.09. We'll go down and put our stop at 94.05. So the initial catastrophe risk on this on a daily chart, risking a $1.19 on it, right? 119 pips on this trade. And let's see what our first profit target will be. What I want to do is I want to measure from the high down to this low, right? We're looking for the market to rally up to that 38.2. We'll put it slightly below that. That's 97.51. We'll go 97.45 as the first profit objective, 97.45. So we're looking to make 221 pips on that one. That's our first profit target. And we'll be quick to move that stop up. We'll see what the market does today, where it closes out, and then we'll revisit it tomorrow morning, first thing. Let's take a look at the ARMH trade, the stock trade. Okay, now yesterday, as you can see, I was a little surprised by the gap opening from Friday down to yesterday. But the more I looked at this, I stayed with this trade, okay, because of the fact that we're still at major support. This is a 200 exponential moving average. This stock has been up big time, right? Pull back and rallied again to a new high here. We're down to the 200 exponential moving average right now. Measuring the fib levels from a further back. Well, let's take a look at this. We measured it from going back to this low down in here. Let me get my pen out. Right here, measured from this low to this high. The 38.2% retracement was right here. We gapped below it. Remember, long this market at $40.60. $40.60. Market did gap lower. Initially, I had that stop below these lows, but of course, I placed my stop orders at the beginning of each day. I don't leave them in overnight because I'm here during the day. Market would have gapped down through it, but again, I didn't have my stop in place. But then when I looked at it on Monday morning, I'm like, you know what? Let's give this some room. We're at the 200 exponential moving average. We're down at 38.2, slightly below that, between 38 to 50. Market bounced up yesterday, as you can see. It closed in the bottom third, I would say. But look at the market right now. And after hours trading, this looks like it's going to open up at $39. Yeah, let me show you on my. Look at this, $39.51. So this has come back quite a bit. Look at where it closed. Closed yesterday at 38.45. It's going to open up roughly 39.51, which is actually above yesterday's high. So it's going to open up above that high. So right now, I'm not going to use any intraday data for a stop on this. My stop right now will be below yesterday's low at 38.45 to 10 cents below it. I'm going 38.30, 38.35, 38.35. I'm risking $2.25 on this. Risking $2.25. Okay, so the market's opening up higher. Stop is going to be below yesterday's low at 38.35, 10 cents below it, below that 200 exponential moving average. We're going to get a little, we're going to give it a little room to run. We're going to see what happens. Back to the general market itself. Yesterday was an up day, and then it reversed intraday, closing mid-range, and it looks like today is going to open up. Let's see, 1633 is where we're trading right now. 1633. It's going to open up about $1.25 lower than where it closed yesterday. Again, we're kind of in a holding pattern. And here we've supported nicely at that 50 exponential again on the overall market. We're kind of etching higher. A big number here would be this high right here. We weren't able to clear through that yesterday, right? The June 10th high of 1642.5 is a big number. Yesterday came close to 1641. So we're kind of in a little range right here. And we're going to look for the market to either break up through the highs or down through the lows. And that's about all I have for you. So let's just go back real quick to the US dollar, Japanese yen, and see where we're trading. All right, here we are. So again, trading at 95.61 right now. The initial stop on this is 94.05, which is below yesterday's low by 5 pips. All right, have a profitable day, and I'll be back with you tomorrow. Bye for now.